So I know it's been quite some time since I last posted a YouTube video, and in my defense, life did get to me. I had a kid last week, other stuff happened, and I just completely fell off when it came down to making long form content. But now I am back, and hopefully I can be more consistent with providing trade breakdowns to you guys and providing as much value as I can to you guys. In today's video, I'm going to be going through a trade that I took on the 25th of September 2025. This trade made me $11,126 on my Titan Capital Markets 200k funded account, a payout that I actually requested in person at the London Prop Trading Expo from Titan Capital Markets, and that payout did in fact get approved and landed in my crypto wallet last week. As you can see right here, this was the trade that I took that made me $11,000. I was actually a little bit greedy as well, and I tried to go in for a re-entry, but ultimately that trade did hit break even, so nothing gained, nothing lost. I'm happy. But let's go ahead and break the actual trade itself down. Alright, so the trade was on US30. This was during the New York AM session of US30, 25th of September 2025, as you can see right here. Very simple, very, let's just say, textbook to an extent trade. All right, first and foremost, if I go on the 15-minute time frame, just so you guys can see what's going on the 15-minute time frame, overall the market was very bearish, and I was anticipating some sort of bullish price action from either here, or this daily low over here. Three major points of time-based liquidity that I was expecting some sort of short-term reversal from, and I was simply waiting for these areas to get raided. Overall, as you can see, for the last couple of days we have been bearish, but again, I'm a scalper. I trade the 1 minute. I just need to make my money on the 1 minute time frame, get out, and whatever happens after that, I don't care. Personally, sometimes I don't even use a daily bias. I'm a big advocate over the fact that if you are a scalper, you do not need to worry about daily bias or direction of the market or drawn liquidity, because you're trading the 1 minute time frame. You're trading it on a mechanical, algorithmic approach, and the market is fractal. What happens on the higher time frames gets reflected in the lower time frames. I was simply trying to catch a small move, a small retracement move in a bearish market. All right, 8:30 New York kicked in, and of course, first things first, we took out this daily low over here, and we did not get any lower time frame confirmations in order for me to take a potential reversal from that area. 9:30 New York Stock Exchange Open then kicked in, and we went ahead and took out this daily low right here from the 18th of September 2025. Ultimately, my main area of reversal would have been this wick over here. This was from the 17th of September 2025. This wick right here is a data wick. It's from FOMC on the 17th of September. I was anticipating the reversal to occur from here. So ultimately, my expectations for reversal from this area were quite low. I was anticipating the market would go ahead down to this area over here, this data low, and then give us a reversal from here. But anyways, if I drop down to the 1 minute time frame, at 9:30 New York Stock Exchange Open, as you can see, the market went ahead and rallied towards the downside. Our manipulation leg occurred right there. As you guys may or may not know, 7 times out of 10, the 9:30 New York Stock Exchange Open is a manipulation move, and the fact of the matter is, at 9:30 New York Stock Exchange Open, the market went ahead and dumped down, taking out this daily low that I marked out over here, and we started to see some bullish pressure. Now again, I did have weak expectations regarding a reversal from this daily low, but as you can see that at 9:43, 9:44, the market started pushing towards the upside, and we in fact inverted this fair value gap right here. As you can see, 1, 2, 3 fair value gap got created, and then after 9:43, we started seeing the market push towards the upside and inverting this area right here. Now at this point, we closed with a body close inside, and at this point, I still wasn't convinced that we'd be seeing more bullish price action at this candle over here. Now I want to go ahead and bring your attention to this candle over here, this massive rejection candle. The market opened up, printed all the way down towards these lows. It failed to break this low, and once it failed to break that low and it rejected towards the upside and closed with the body close inside that fair value gap, so I was like, you know what, I'm going to go ahead and take this trade. The candle closed over here. As you can see, this is a bearish candle, so the candle actually closed over here, and as soon as that candle closed, based on the fact that we have this rejection, we've got our daily low getting swept, we've got this inversion over here, 3 confluences more or less giving me an excuse, let's just say, to take this trade. I went ahead and took my entry, manually executed over here with my stops at the low, and take profit was at this particular wick all the way up here. Now of course, normally I go for a 1 to 2 risk to reward ratio, so ultimately I should have closed at around here, but the reason why I held all the way till here is, number one, that wick is a very obvious drawn liquidity, and number two, I actually fumbled with my risk management on this trade because I entered so quickly and I entered without calculating my lot sizes properly. I actually over risked on this trade. Instead of risking 1%, I risked just above 1.5%, which is something that I wouldn't recommend that you do on a funded account, maybe on an evaluation, but I'm a big believer of not doing these high risk entries on a funded account. But I went ahead and did it anyway by accident, and ultimately the market went ahead and obviously pushed towards the upside, came back into drawdown, danced around in drawdown, but then at 10:01 the 10 o'clock candle opened, and as you can see, we just started rallying towards the upside and hitting our first take profit, or my original take profit, which would have been at 1 to 2, and then number 2 is obviously drawn liquidity manipulation wick all the way up there. The trade in itself ended up being a 1 to 3.4 R risk reward ratio trade, risking just above 1.5% on a 200k funded Titan Capital Markets account. I ended up making $11,100 and something dollars. Now, I did in fact attempt to go ahead and take another entry right here. This right here was our breakup structure. The market then continued to expand towards the upside, and I went ahead and marked out this breaker block, this mitigation block, whatever you want to call it. I went ahead and marked this area out for a potential second entry to potentially make a bit more profit on the account. Obviously less risk, not going to be risking the whole 11 grand that I made, or a whole 1% on the actual trade itself. After all, I want to keep my profits on me, but I was anticipating that they would see some sort of bullish price action from this area over here. I went ahead and entered right here with my stops at the structural low, aiming for a 1 to 2 risk to reward ratio right there. And as you can see, after that initial expansion, we failed to break these highs over here, and we came back down to break even. But by that time, my stops were in fact at break even. I gained nothing, I lost nothing. I'm still up 11 grand on the day. Now, if you want a proof of execution, as you can see right here, there was this initial entry. There was actually a second entry that I called out before my second entry that I actually took as well, which was right here, which actually hit break even. And then in this scenario, I guess the entry that I took would have been the third entry, not the second, which is my bad. The first entry was around here. Second entry was at this breakup structure. After we went ahead and closed with a body close, I took another entry over here, hit break even, took a third entry on this breaker block, and that eventually also hit break even. Again, it's not the fact that I was trying to squeeze as much as I could out of that trade, it's the fact that I did see this obviously pushing further towards the upside, because of course, if you have a look on the 15-minute time frame, we've got all of these areas of equal highs right here. We've got a 15-minute fair value gap over here as well, as you can see. So these were potentially my extreme draws on liquidity for potential re-entry for more potential profit. But ultimately, we didn't reach these areas. We hit break even on the second and third entries. First entry again, 11k up, happy. And then the rest of it is obviously history. But yeah, that was the trade. That was the trade that made me $11,000 on a 200k Titan Capital funded account. All it took was marking out my time-based liquidity, anticipating the manipulation from the 9:30 New York Stock Exchange open, getting my inversion and confirmation in the lower time frames, and then obviously taking that risk of manually entering, and of course stomaching this drawdown period before I finally got rewarded for my efforts and my patience. That is literally all it is. I hope this video was in fact informative and educational. I hope you guys did in fact find some value from this breakdown, and you're able to apply what you've learned onto your own executions. And of course, if you guys are interested in Titan Capital Markets, as you can see, they have paid me out over $100,000. I think I'm at $150,000 right now in payouts with them. Then use the code CYPHER for whatever discounts they might have on at the moment, and I'll see you guys in the next one.